So truly, right now you look around you and you see that people are really afraid. People are confused. They don't know which direction to take. They don't know, should I buy? Should I sell? Should I wait? What should I do? Should I talk to my loved ones? Should I stay home? Should I leave? Total confusion. If you're doing everything ethically, relax. Everything is going to work out. Just have faith. Faith in yourself, faith in others, and faith in God.
I learned long ago from a mentor of mine that you should only seek advice from someone you'd be willing to trade places with. And when the whole world seems to come to a grinding halt and financial collapse is almost inevitable, that guidance I would seek would be from Cherif Medawar.
Hey Cherif, how are you?
Great. How's it going?
Very good. How is everything out there where you are?
Well, I'm in Cancun right now, and I spend half the year here on and off, and everything is good. Unfortunately, the occupancy is 30% now in the resort, so that's not fun, but it's happening.
And again, thank you for taking the time to do this. But there are a lot of people who are, kind of shaken by this entire pandemic and just don't really know how to feel, in a lot of different ways. A lot of people right now are very stressed, financially, and worried about the economy, worried about the prospects, future prospects, and so, they always look to people with a great track record, and I don't know of anybody who has a better track record than yourself with, financial downturns and capitalizing on the opportunities that arise. And so I wanted to see if you, could give us a little bit of insight on how you're approaching this. Is this making you nervous? I mean, do you feel the way most of us do, with the uncertainty? And, just some general, insight.
So thanks for the question. Actually, there is what's called the risk of uncertainty. Nobody knows exactly how long it's going to be. We do know, however, that many businesses and personal lives are being affected. So yes, a lot of people should be fearful. Practically all my business models are set up for these downturns. I've been in the business for over 30 years, and that's where experience comes in. As a matter of fact, that's why I'm not a real estate fund manager. I'm an actual real estate hedge fund manager. For instance, investors' money in my funds, like MIXIF or SFI fund, their money is cross-collateralized between different assets with different style of investing in different locations. So you can almost split the portfolio between Puerto Rico, Old San Juan, where we have commercial buildings that have tenants downstairs with corporate guarantees. That means we're going to get paid either way, because these are backed by big banks like Wells Fargo, Citigroup, etc. And we also have upstairs Airbnb, which there is now a strong need for some of these units to be taken by some cruise people that got stranded, and also some other people that want just short-term stay. So we're doing very well there in Old San Juan. Even though the cruise business is on hold and everything is practically on hold there, we're still performing. We have the cash flow. We also have the properties in San Francisco that are luxury single-family homes that we flip. So we have the commercial that we hold and reposition, and we have the residential that we flip. Now, thank God we're not selling anything at this point. We have about 4 months for the first property to sell out of 7 properties. The rest will be staggered to be sold. So we have plenty of time to reposition things, and we actually have brokers asking if we want to pre-sell a property or two, because there's such scarcity. You see, the markets I choose and the business models I choose are based on demand through the historic declines in the market. If you look at 2007, end of 2007, 2008 recession, San Francisco had dropped 10 to 14%, the worst, and recovered the fastest. Other markets dropped 40, 50, and 60%. So we have history here to go by. And if I may add on that business model, for instance, in San Francisco, we add square footage. So I take a property at 4,000 square feet in Presidio Heights, Pacific Heights. We add square footage, let's say 2,000 square feet in the basement, cost us maybe $400 or $500 square foot, but on the exit it's $2,000 square foot. So it's a $3 million profit built in right there on a property that we bought at $5 million. So the market will have to drop literally 30 to 40% for us to break even, and that's just so highly unlikely. And I am maybe too optimistic, but that's the idea of a hedge fund. That's why I survived. And to my surprise, actually, the stock market has done so poorly with all this that people are cashing out and coming into my funds, because when they deposit the money on a Monday, they start accruing the interest on Tuesday, and we're able to deploy the money and we're able to work the money as hard as we should. So thank God we're doing well with investing. And I'm feeling bad for all these entrepreneurs and employees actually that are on salary that are now sitting home and they're going to be laid off or their salaries are cut off.
When I was talking to Ashley, she mentioned the fund has never missed a payout, even in the downturns, many recessions, any challenges. You've not really had to face those challenges, right? How do you do that? How have you done that?
Well, basically the way the fund is set up is that we're able to have enough cash to do the rehab and to continue the process of acquiring good properties at what market dips. So with having so much cash reserves, it works out great because we're able to always meet our obligation. Even we had some investors that wanted to cash out. We have only 1 year notice required, and we're able to cash out investors that wanted to cash out. I mean, literally last week, in the midst of the curfew and all these problems, we cashed out a couple of investors that were ready to be cashed out. And then a couple of days later, I get an email and the person says to me, can I go back in because I don't know what to do with the money? Everything is around me unsure, and I much prefer to make 8% steady with you like I've done for the last 9 years. So, and we're also getting them in. I mean, today is Sunday, and we actually send him the documents, and he'll go back in on Monday. So.
And a lot of it is, if I'm not, correct me if I'm wrong, it's because of how you actually acquire the buildings and the way that you acquire them with built-in equity, right? Because you're acquiring them pre-corporate tenant, and that goes back to your JV partner program, right?
Yes, we absolutely, the way we structure, for example, let's talk about the joint venture for a second, which is so parallel to what we do in the fund. So with the joint venture program, we have students that say, hey, listen, Cherif, I want to find what you're looking for, and I want to get a marketing or an assignment fee. So we focus on single tenant buildings, and these are standalone buildings on busy streets that can actually accommodate big national tenants like the Subways, the Starbucks, the Foot Locker, etc. And what we do is we give the students the proof of fund letter from the fund that has millions of cash, and we actually get the student to put a property under contract. They have a list of national tenants they call on. We tell them what to say. We tell them how to line up the tenants. And once one tenant is interested, I get on the conference call with the tenant, and we work the letter of intent to get the tenant to stay in the building 10 to 15 years. I give them a generous tenant improvement allowance, etc., and we make the deals happen. And if no tenant is lined up during the duration of having the deal under contract, which is usually about 45 days, if no tenant is lined up, no tenant responds, the student who is in the joint venture program does not have to buy it, does not have to assign it to me. They just walk away, and whatever earnest money deposit they put in, which is usually like maybe $5,000, they get it fully refunded. So it is absolutely no downside. It's a huge upside. Right now as we speak, we have 4 deals that we're negotiating, 2 with Starbucks, 1 with Foot Locker, and 1 with cannabis in Los Angeles. Los Angeles, Virginia, Michigan, and another one is in Texas. So it's happening and it's working, and I'm actually surprised that the tenants are emailing and discussing things. Of course, they're saying they want to buy a little time, but also the sellers of the buildings are giving us a little bit more time. So the 45 days now is expanded to 60 days.
So how is what's happening right now with the pandemic and with the changes, how is it affecting, or do you see it affecting in the future? I mean, how is it changing what you're doing, or what you're going to be doing moving forward?
Okay, so for example, yes, everybody's very worried. I'm concerned. I'm not like losing sleep over it. I know we've gone through swine flu in 2009 when the economy was really in a disaster state, and we recovered from that. We had September 11th attack. We've had Ebola. We've had so many issues before, and I know this is completely different because this is worldwide. and everything has stopped. But when somebody tells me I'm looking for a commercial building, I don't know what to look for. Look for a 10% cap. That's your time. And look for the lenders, start lining up lenders that are going to give you the loan. The interest rate is now around 5% or even less because the Fed dropped the interest rates to zero. So the problem is when you get those commercial loans, it's not going to be 30 years and whatever, it's going to be probably 25 or 20 years. And it's not going to be due in 7 or 5. It may be due in 5 or 3. So there'll be some adjustments to make. But if you continuously focus on cash flow, you'll be able to make your deals happen. I'm talking to investors. If you're selling, be flexible. Maybe carry some of the financing. Maybe do a wraparound mortgage. If you have a credit line on your home or an investment property, withdraw it as soon as possible because they're going to shut down the credit lines or they're going to reduce the credit lines that they have given you. So there are certain things you got to do to protect yourself. And yes, in our office, we're getting a few calls. We're getting people asking questions. And we're always answering. info@cmrei.com. Work with our students, the JV partners, the co-sponsors, etc. But you should not be so worried to a point where you're paralyzed. You should take this time to plan. Actually, we're going to even create and send a little program, if you will, that has to do with not just your physical health, but your financial wealth. It's a checklist with calculations on an Excel sheet so we can figure out where you stand financially and maybe can give you some advice on what programs can help you. And almost, when you look at wealthy people, they almost all of them knew what to do when the markets were down. This is where big money is made. I mean, provided you're healthy and you know how to take care of yourself. So don't be so scared to a point where you have total paralysis here.
Do you have a reaction to what's happening with interest rates? How do you think it's going to affect things long term?
Well, they dropped it so quickly. It was very surprising. And when they bring it back up, they bring it back up slowly. I'm really liking what they did because not only did they do that, but they're printing $1 trillion worth of currency. You know how powerful that is? That creates liquidity in the market. So whatever dip we're going to have in the economy, the recession, etc., I think it may last 6 to 9 months and then things will start recovering. I am optimistic. I've always been optimistic because this is the United States. This is not Greece. This is not France. This is not part of the European Union where they cannot print currency. We print our own currency. We control our own interest rate. And we actually have everything set up to combat these type of downturns. And we have a president that's very aggressive when it comes to economic downturns and what should be done, etc.
So you are optimistic then, which
Yes.
is good.
I mean, look, you should behave in the short term for what's going to make you survive in the long term. And everybody has to cut expenses, has to economize, don't act foolishly. Don't go, if you're going to buy a building, don't go make an offer on a short term. I would, like right now, we're looking at a hotel that was going to be at $4 million. We're going to get it at $2.5 million. We're dealing directly with the bank. And to my surprise, the bank accepted $100,000 option money to close within 4 to 6 months. We're going to find out next week. Is it 4 or 6 months? That's what they're accepting. They would have never accepted an option and close later. But see, that time is so crucial for me because then I can decide what to do. So I limit my risk with the option money because it's non-refundable deposit, but I'm controlling an asset that will certainly cash flow exactly the way I want it to cash flow, and it's just going to be a home run with like 60 cents on the dollar.
Wow. And that's actually similar to the last deal. Your story of your last deal before you broke off and started doing it yourself. If I'm not mistaken, that's the same structure, right? You optioned it.
Yes, exactly. Options can work magic in these times, and the key thing is keep looking for assets, keep lining up lenders, and understand. Then you will know when to jump on the opportunity. The key game is always what is the cash flow, what is the net operating income, and how much of that is going to cover the debt and is going to be returned on the cash I'm going to put as down payment, and lining up the lenders that will verify that and say, yes, we're going to give you so much. So you start always with what's the net operating income and what's the cap rate in that area, and can I get a higher cap rate? That means can my money work harder for me? And now some sellers are panicking. especially if they're banks and big lenders.
Do you have a reaction to what's happening in the stock market?
There is what I call an overreaction almost always in the stock market. So, some stocks went down 30 and 40%. The irony of it is I would not go into the stock market right now. It's very volatile. It's just very crazy. And there are overreactions. And then there are moments of, it came back a little bit. Just a few days ago, this one of the students I know had emailed me. He's a graduate of one of the events I know I did, and he said, "Hey, listen, Cherif, I'm gonna buy United shares. They went down so far, and I'm just gonna go ahead and buy some." My response was, "Are you asking me for advice? Or are you just telling me what's going on?" And he said, "What would you do if you were me?" I said, "I wouldn't buy it." Well, he bought it anyway. A couple of days later, it goes down another 10%. He literally lost $30,000 in a matter of 48 or 72 hours. So then this person is now asking me, should I cash out now or should I wait? Well, listen the first time, you're not going to listen the second time. So I said, well, you know what you have to do. You do what's best for you. And, I would say right now, stock market is something to avoid. We have a lot of people that are actually coming into the fund because they don't want to be in the stock market. We also have the opportunity with the tax incentive program that we have, where we are able to help people reduce their taxes to 15% flat. I am surprised that the two doctors that called me just this last week, we had a conference call, and they are just making a lot of money. They're serving a lot of people. They're under a lot of stress, and they said, look, I'm actually making more than I've ever made, and I'm anticipating to make a lot more this year. I want to get into the tax incentive program. I want to get into the engagement agreement. And this person made 1.5 million last year and paid about 650,000 in taxes according to this formula. Now we're going to drop his taxes to less than 200,000, and he's going to make a lot more. So, he's going to be pocketing an extra $500,000 year over year. So just imagine the impact we can bring to somebody like this, who's serving people, who's working around the clock. And that's what we're all about. If we can help somebody, why not? And probably from the $500,000 we saved him, he's going to invest some more.
You mentioned that you, in the past, so not just an individual like that, but an entity. So corporations can benefit from this also.
If you're a C Corp, if you're an S Corp, if you're an LLC, if you're an individual who is a licensed professional, we can help all these people. The only people we cannot help is somebody who won the lotto or somebody's on a W-2. So somebody on a W-2, they already take their checks. We can't help them much with taxes. They already take their money from the check before they receive the check. The federal, the state tax, the Medicare, Social Security, etc. All these deductions.
You mentioned actually a lot of people are pulling out of the stock market. They're redirecting their resources or actually increasing their portfolio with you in the fund. Can we talk about why they're doing that, what the return they get?
Okay, so if somebody invests from 25,000 to 249,000, they get 6% steady return. Remember, their money is cross-collateralized against all the assets, so this is not like a typical fund where they invest against one asset. They're hoping that apartment building does well or whatever. This is the money is invested into the fund that has assets of over $100 million. So their money we have high safety. Number two, the cash flow is paid February 28th, August 31st. So every 6 months. They get 6% if they invest 25,000 to 249,000. They get 8% if they invest 250,000 up to millions of dollars. So that's 4% every 6 months. So people love it. They get 1% in the bank. I'm paying 800% more. Actually, even a chart I want to mention. There's a chart that just came up because Icahn, ACAHN, who is one of the gurus in the investments of the Wall Street and all this, he said, listen, I'm shorting the CMBX, which is the mortgages for commercial buildings, because they're going to have defaults. So I have a few people emailing me. It's like, oh my gosh, Cherif, what's going to happen? Well, we are positioned totally different. We are not, we don't get, first of all, we get very low leverage from the banks, very low interest rates, and we lock in the terms the way we want. So our risk is a lot lower, number one. Number two, is when you are positioned in these type of in a fund like mine, the cross collateral helps you because your risk is reduced, your cash flow is coming steady. We already have properties performing, and we have properties that we flip. And number three, we have liquidity. Anybody that want to cash out, you don't have to be stuck 5 or 7 years. You can actually email, and we cash out within 12 months. We've cashed out people within a 6 months period. And number four, we always have reserves. The reserves are very important for us to jump on good deals like the hotel we have under contract, the JV partnerships we're doing, etc. So we have cash reserves, and we're able to cash out people as promised. So we've never missed a payment. We continue to grow, and these dips in the markets just allow us to grab assets at the best possible prices. You can go to mixif.com, scroll down, you can see the link on the sec.gov, and you can see all the analysis from 2009. And remember, 2010 the market dropped, 2011 the market dropped, 2012 it stabilized, 2013 it went up. You can see all the history of all the transactions we've done up to 2015. These are by the regulators right there on the website from the sec.gov, not from me telling you how great we're doing, but what the regulators are saying. All transactions are profitable. All transactions have been profitable. And that's the power of investing with somebody who knows what he's doing, diversified the proper way by location, by type of asset, and by type of and style of investing.
Do you have a reaction to what's happening with Bitcoin and cryptocurrency?
Well, sadly, the Bitcoin dropped to 40% just a couple of weeks ago, so it's not as flexible of an asset or as resilient as they were expecting. So I kind of feel bad for these people that invested in Bitcoin. I actually just sold the hotel on March 4th to one of the big gurus of the Bitcoin world, who is the 8th wealthiest guy based on Forbes magazine. We closed the deal, 4.8 million, a small hotel, 9 suites, gorgeous location. It's in Old San Juan. And I pushed the deal through knowing that, hey, you know what? The news on that virus keeps getting stronger. They already like the building. Let's make it happen. We sat down. It was a very good meeting. I used all my wits and all my flexibility and all what I teach, and I made the deal happen. And when we closed and I walked out and we handed the cashier check to the bank was there and all this, and I had to hand it to the lady from the bank so they can deposit it. She looked at me and she said, I can't believe this happened. I could have sworn this is not going to happen. This is the only transaction happening this month. And hey, you know what? When you're dealing with the right people and they're good, honorable people, I was very happy they lived up to the expectation. They were going to lose $500,000 of non-refundable deposit, and I would have worked with them. I don't want any bad karma in business. But, they knew, they said, hey, listen, this is going to be a dip and it's coming back. They were very confident in the overall market in the US, etc. But I would not invest in Bitcoin. I don't transact in Bitcoin. That's a personal choice. In God we trust. I look at the US dollar and that currency I deal in, and I don't look outside the US. I'm in Cancun, but that's personal residence. I don't invest here. Wonderful to enjoy the beach and all this, but no investments anywhere outside the US.
So even one of the, you mentioned he's one of the gurus in cryptocurrency, because crypto did see a little bit of a spike recently with the stock market taking such a big tumble. So even one of the biggest cryptocurrency investors is investing in commercial real estate and dealing with you.
Yeah, they're very smart now. They've seen the up and down so many times, so they cash out. When the market is down, they wanted to cash out and invest in commercial buildings, but sadly for them, their currency went down as well, but they still went into the commercial buildings knowing that at least there's steady cash flow. And as a group, because they're a group, they said we're better off getting a building, knowing what we're doing, and so that was a smart move on their part as well. And for me, it added so much to the cash reserves. Now we can literally go and transact and help some people that want out and make some good deals for the investors and for my database of students.
With the economy being potentially a bit unstable, what advice would you give to somebody who thinks that maybe this is going to affect, or that would affect, whether or not they should invest in commercial real estate?
Okay, so maybe people can actually find a backdoor to being in real estate. For instance, people can learn how to be loan processors. People can learn how to be loan originators. It's just like a 20-hour class that you can take in many states, and then you can just go work with a lender. And this is going to be a big boom for refinancing, for new loans, etc. So ride that wave If you lost your job, it's not so difficult to be a mortgage broker. It's not so difficult to be a real estate agent. You can go work in a hospital, be an administrator, a greeter, somebody who is actually, somebody just told me they lost their job, and they sent me an email. They said, Cherif, I just got a job being a patient transporter. I'm going to make more money than I was making in my job. I can't even believe such a simple job pays so much more than my professional job. So you'll be amazed. I mean, just search what markets are growing. I remember in 2009, I had a building, I put it under contract, and I called on tenants. Remember 2009, the market was sucking wind. It was horrible. And who called me? Crocs called me. Crocs was growing because they were making these sandals and shoes at less than $5, and they were selling them at $60. And when they would actually say this is at a discount at $40, they were selling like crazy. So they were expanding, but the economy was going down. And I leased to them at $20,000 a month for 10 years, triple net. So you always look, if it's a job, look what jobs are growing. Where is the demand? If it's a business, where is the demand? There is always demand somewhere. Money shifts. It doesn't stop, it shifts. It goes from one to another. Today, look at the hospitals. They're overwhelmed. So that's what I would advise people that are employees, investors, just be very cautious. If you're going to make offers, be very careful. Make sure you line up the financing first. Make sure you understand the cash flow and you can verify it. Make sure the cap rate is better than comparable cap rates, because things are changing. And when things change again and stabilize, you want to be able to decide, do you refinance again? Do you keep it? Do you exit? What do you do? This is, remember, every time there is economic problems that are worldwide, more money eventually comes into the US. We print money and more money comes in because it's a safe haven. So those are my two key points.
So for you, it's not necessarily time to panic, more so position, or rather reposition, and kind of redirect whatever resources or capital they have into real estate.
Oh, for sure.
It's not doom and gloom. It's more like doom and bloom, I guess you could say, right, for some people.
Doom and bloom. I love that one. I'm going to quote you on that one in the next. Like speaking of seminars, you asked me how I'll change the business model. So we're doing a lot less live events, and what we'll do is a lot more online. So people who subscribe to our YouTube channel, Cherif Medawar, the YouTube channel, join me on Facebook, and Twitter. I have a lot of sayings on Twitter, LinkedIn, and all this. All these people are going to be able to continue with us based on what we're doing, and if they want to join us in the funds, they can join us. We can take non-accredited investors in some of the funds we have. We take mostly accredited investors. You can see what deals we're looking at, how we're analyzing the deals as the market changes. Things change, but the principles are the same. They can actually also set up their asset protection. We can talk more about this, because when the economy is difficult, people want to start suing. They're stressed, they're afraid, and people behave frantically. That's the worst enemy you can have, is your own fear, is when it becomes a frenzy. So you got to protect yourself with the asset protection program we have. We have the least expensive, most powerful asset protection. It's kmagb.com, kissmyassetsgoodbye.com. It's a name, people will forget it, but just watch the animation video of 3 minutes and they will see.